What is going on, everybody, and welcome to another weekly update. Now, in this video, what I like to do is provide you some upcoming events, some upcoming earnings to help you get prepared for the week ahead. Yes, I do provide stock picks, but in this market, I feel that it is extremely important to stick with a few and not be chasing. But with that being said, if this sounds like something you're interested in, consider subscribing as I do provide daily updates as well to get you prepared for the day and the week ahead in this phenomenal market that we are currently in. So, with being said, and much dramatic pauses and whatnots, we're going to go ahead and get this thing kicked off. I'm going to go ahead and pull this up so you can kind of see what I am looking at this week. Now, this week is going to be very pivotal. I've been talking about this coming into July, that there is a lot of concern about recession. Even myself, um, it seems like I'm very much a perma bull. So what that essentially means is that I believe the market is designed to go up, and it's going to continue to go up in a large time frame. Over time, it will continue to go up. But right now, this year has been a pretty nasty year. And looking at where we're going from this point, ultimately, what is the most pivotal part is at the back half of this month. We have the FOMC meeting, which is on the 26th and 27th. More so, the 27th is what is more meaningful, as we will get the official report on the basis move, and we'll also get Powell fielding questions. That is really what matters. But before that happens, we have a lot of earnings coming up this next 2 weeks. Got a lot of critical data coming up. Primarily on Wednesday, we have core CPI data coming out at 3:30 a.m. This is actually be a.m. Why that is, but 3:30 a.m. Eastern Standard Time. So core CPI is really going to give us insight. We're trying to make sure that this thing doesn't continue to push over 8.6. In my opinion, I think we're going to see something over 9 plus in this next coming core CPI report. We do also have the beige book. Now, what is the beige book? The beige book comes out also on Wednesday in the afternoon. That is correct, at 2 p.m. Eastern Standard Time. That is just going to essentially give notes into the next meeting and kind of what they're looking at. And that is going to be very pivotal, because following Wednesday, you're going to have some earnings. We're starting to get into earnings. We got JPM, TSM. I believe there's also United Healthcare and some other banks that are also. There's quite a few other banks that are reporting. There's quite a few other different things reporting. In my mind, these are the two that I am really watching this week on Thursday, JPM and TSM. TSM looking for the semiconductors to see what they're doing, looking for the chips. Whatever TSM does, you're going to get a butterfly effect with the rest of the chips. So that's going to be very critical to watch on Thursday. And those are both actually before, those are pre-market. So we're going to get those earnings first thing on Thursday. And then we head into the following week. We actually have Tesla on the 20th. So that's what's interesting. But watch list, what's really important, really been watching the index. Index is kind of sitting still. Tesla, again, I think Tesla's going to have started to make a massive rip. I think this thing is going to continue to rip. Something I've talked about last week a lot is I was expecting some sort of rally, pre-earnings rally before we get the Fed, because when the Fed comes on deck, the market's going to correct and whatever basis move comes out. And I've said that we've tried to do some kind of pre-earnings run. But one thing that's really concerning is, last week and this week are supposed to be some of the most bullish weeks on the year. And we have hardly really even moved. In my mind, that's actually quite concerning. There's a lot of concern of recession. But with that being said, I got Tesla at 52, Google, a massive potential mover here. It's got the stock split, not this week, but the following week. BA at 8 points, JPM at 5, and Airbnb at 7. Again, ultimately, this week I don't really play earnings much. Typically, I've been playing the index, Tesla, potentially Google this week, but ultimately I start playing a lot of post earnings. So you'll probably actually see this watch list become a lot more different next week after earnings. Probably have Apple, Google, Amazon, Tesla, whatever else reports the following week. No, Netflix should be that week as well. But that's what I pretty much got. And so, as far as my list there, what's really important again right now is to really kind of gauge the market wants to run. The market wants to get in an earnings mode. It's been really trying. We had Tesla had some massive moves, but the rest of the market is kind of struggling. The banks look like they're ready to break out, and then they pulled back. Now, if the banks start having some bad earnings, that is going to be really, really concerning into recession fears. You have the dollar, which has been skyrocketing. It's been pretty tame over the past week, but it's been skyrocketing while other currencies are falling down. You had a yield curve inversion over the past week with a 2-year and the 5-year. You've had oil. Oil's been kind of sitting flat. It's almost as if the whole world, the whole market is waiting to see what happens with the bank and the core CPI this week. Believe me, that core CPI is going to hold a lot of weight. If we find that comes in over 8.6, people are going to be concerned. And something I'm favoring over 9, like I said, for this next core CPI. I think that's really going to matter because that will show that essentially inflation hasn't come down. And if that's the case, you're going to see the Fed make a huge move at the end of the month. They first initially said 50 to 75 point basis. Now this week they're leaning more towards 75 point basis move. Again, I wouldn't be surprised if they start talking 100 point basis move. And we're starting to slowly see that. We did see non-farms come out on Friday, which is actually really interesting to me and funny that non-farms came out, and because our expectations were so extremely low, the market started to rally. Oh, well, we beat expectations, so let's go ahead and rally. And ultimately understand that we've been in this lull of low, essentially low employment, right? And ultimately understand that now, given a lot of the data is kind of skewed because they don't really count people that are kind of running their own business kind of thing and being entrepreneurs, whatever the case is. And we did just have, essentially the great departure from I forget the word. It's escaping my mind right now, but whatever they called this past year, right? Where everybody is trying to be an entrepreneur this year, and so you got a lot of people out testing the waters, trying to do their own thing, and that's not counted. They consider those people unemployed or unemployable, I think is how they gauge that. But nonetheless, those numbers are really starting to show over the past couple non-farms. Again, a non-farm comes out every Friday, first Friday of every month, and so there's always that. But being said, you have a lot of concerns. Elon has actually spoken about it. Elon's made moves about it. Many other companies are making moves about it. Many other companies are doing splits. Again, these are all recession worries. And then you have the Fed and everybody coming out saying, no, it's okay. There is no recession. Now, they're not going to straight out tell you there's a recession. They'll tell you after the fact when it's official. But they're not going to tell you because they don't want to introduce panic to the market. Because if the market breaks, I've been talking about this level. This is where the 100-point basis move is. If they do call for a 100-point basis move around, again, the 36, if we break that, you're going to get in sheer panic mode, and this thing could really start selling off. Now, currently, I think right now we are really rating on core CPI. If it does good, we could potentially have a major rally. And I think if that's the case, if core CPI is roughly at 8.6 or maybe a little bit lower, that may be some sign of relief. That may actually rally us all the way up to the 50-point basis move. The 40.63, I think is a strong possibility if the core CPI falls in line. Now, what do I mean falls in line? I mean it comes in at 8.6 or lower. Now, if it comes in any higher than that, you better believe that the Fed is going to take some major action and start really increasing rates at a faster pace. So, with all that being said, again, what I'm kind of looking at is some sort of rally and kind of looking for us to kind of hit this 39.67. If core CPI is good, if bank earnings are good, I think we could potentially start running for that 50-point basis move, potentially even that 25-point basis move. I don't know why it says 24-point basis move, but potentially even up to the 42.36. I think is a strong possibility. We want some kind of like pre-earning bump is what we're really looking for. But we're still the market is way too reliant on data, and I've never seen data so strong in every report that it changes the dynamic of the market week by week. You get whispers of, no, it's just going to be 25 points, so the market rockets up to 25 points. No, it's just going to be 50, so it falls back down to 50. That's the way the market's been. The market is played like a penny stock. And we're talking about the general index, right? We're not talking about just the stocks. I mean, a lot of stocks have been absolutely decimated, but you're talking about the general index is just moving like a penny stock, which is absolutely absurd. So, being said, and we've got the start of one of the worst years in the stock market in a very, very long time. So, with all that being said, let's start taking a look at some of this other stuff. So that's what I'm kind of looking at the index. Again, I'm really waiting on core CPI, waiting on banks. Beige book, I don't think will have too much weight. I think there's more weight on the core CPI because we already know where the Fed stand. They're willing to take any action necessary. Core CPI doesn't come in line. You better believe, again, they're going to take some major action. Then we'll see how the banks do. The banks do good. Maybe this will be the last big one. Of course, CPI is high. It's not going to matter. It's going to override whatever happens from the banks. You can believe that. But nonetheless, Bitcoin, again, falling in line with the market. First kind of retest at this 22K mark. But again, first retest, you should get a hard rejection off of here. Then potentially run up again. Of course, CPI is bad. It's not. None of this is going to matter. This is going to sink off. Again, a lot of these charts is kind of hard to really gauge and tell you. Look at this, look at that, because if that core CPI, we could rally Monday and Tuesday, get a really horrible. If we get something over 8.6 on Wednesday, it's not going to matter. It's all going to be decimated and drop right back to 100-point basis move. Is what I'm thinking is going to happen if that core CPI is too high. Tesla tried to really rip here. Tesla production numbers came out for China for June, and they absolutely obliterated it out of the water, which is phenomenal somehow, some way. Elon is always finding a way, but the fact that he is very concerned about what's going on should be a red flag. What if, by chance, Tesla misses? You have to take that in consideration. What if, by some chance, they miss, not on behalf of Tesla, but on behalf of supply constraints? Yes, they've been really trying to create their own ecosystem and really trying to build it without being very dependent on others, just because of the constraints that are currently going on. But they're still going to be affected nonetheless. Even all the manufacturing that they do, right, in-house, there's still a lot of tools that still rely on gas, right, to get to them so they can build their cars. So you have to keep that in mind and understand that it's not just in the U.S., it's around the world. Around the world, inflation is affecting everything. So with that being said, we really want to see Tesla. It really wants to go. Once this thing really starts to rip, kind of watching this level, if we can open above the 750 come Monday, I think this thing can rip all the way back up to around 830. But again, that core CPI, it could run all the way up here. I think Tesla could potentially really break up even higher, up to 9. Again, you got a lot of resistance, but the massive amount of strength it had on Friday is a telltale sign If it opens above this thing is at least going to rip to 826. Now we could potentially chop there and wait to see what happens with core CPI. Again, if core CPI happens, this thing could easily just break back down and sell. Again, there is a breakout here on the daily. But something again to talk about is these breakouts mean absolutely nothing this year. This thing could normally in a normal breakout for the past 2 years, you would at least get a 75% of whatever that initial breakout was, right? Or that initial wedge was. You would be looking like around, that would be easy. 1027. Tesla could easily hit that, pre-earnings, and then. But now you break out, and then it barely, you get like a day or two where it's really trying to break up, and then you get some kind of core CPI data or something. This thing sinks right back into the trend line and then just doesn't go anywhere. Again, strong possibility. Again, 625 is kind of that floor. So if Tesla breaks that, again, I said if Tesla does break 625, we're going to see 500. Again, if Tesla comes in, not this week, but next, Tesla comes in and does not do well, that is going to absolutely destroy the market. This is one of the best companies. All eyes will be on Tesla next week. Google's been making some mad moves over the past week. Again, stock split, I think this is the biggest reason for this. Normally, it's a really good move or two pre-earnings, but trying to watch this, essentially this 2363 coming in on Monday. As long as we can hold above that, I think we get a strong push up to 25, a little over 2,500, but then you're going to have strong resistance. First reattempt, you're going to get rejected hard, and then try to see if you can break up over that. Again, I think after that, this push up to here, you're probably going to get rejected pretty hard, and it's just not going to recover enough. There's not going to be enough momentum in the market, I think, to get over, unless that core CPI. If we get core CPI again that's under 8.6, that could be some gas to really just start lifting things back up. I don't see all-time highs, but it could definitely start changing some direction. Again, any hope of hitting top on inflation would be fantastic, but I just did not see it with Russia in their stranglehold essentially on oil. But so really watching that again, the floor kind of on Google is the 2140 mark. So watching that, if it does come back down, it's been playing range. Try to break out. So really want to see on Monday if this thing could even potentially sell down to the 2312 mark here. As long as it holds 2312 and the next day opens, say Tuesday, that opens here, could get that nice rush back up to the, like I said, the 2500. Could potentially happen going into the stock split. So really want to keep those on watch. This week, premium build on Tesla and Google are really going to start this week too, because going into earnings, the premium for a lot of these are just absolutely absurd. So it's kind of the week to watch. But again, remember, Wednesday could change everything, and that premium, if you're spending 300%, you get that contract on Monday, and it increases 500% by Tuesday, and then Wednesday morning you get core CPI, and that's just going to completely obliterate those contracts. So you definitely have to be careful on that. So watching those, BA, again, another big one to be watching. It's been consolidating a lot. Still got some time here, though. You got till the 27th on BA. Again, if the whole market is in general does well, I think this is really just waiting on the banks. Once we know what's going on with the banks, I think value is going to continue to push. Once it can break out over 147, I think we got a good run up, at least to that 176. So we want to see BA starting to move. Most definitely. Airbnb, again, I'm really watching this wedge break. I pointed this out earlier this week. Kind of really want it above the 100 mark. If we can get it above 100, the general market CPI comes good. This thing is really going to rip, and I think it could rip at least up to the 143 mark. Strong possibility watching that 200 EMA on the daily. I think, again, you're going to get some resistance here at the 115 mark. You're going to get a hard rejection, but I think it could be short-lived. Again, that core CPI falls in line. It's just going to fuel this drive to really start ripping up higher and faster. So watching that on Airbnb. And the last one we want to watch is JPM. I know I had TSM. TSM is more of a gauge for the chips later on this week, so I'm going to kind of see how that plays, but I didn't want to really list any of those. Banks are, again, really important. Really trying to see what's going on here. Again, we're at the bottom of this range. It's really been consolidating just like value right now. It's just banks have looking like absolute trash, and is really trying to break down. Like it's looking for a reason to break down, and it's just not doing it. So you got to be really careful if banks. Again, if banks crumble, it's only going to be a matter of time before everything goes with it, even tech. So even though Tesla may push and struggle and try to get up to try to pre, which it does a lot of different times, Tesla would do really well and try to hold the market up, and then it would just be Tesla by itself. Tesla may have 2 strong days and then limited days, but you can see the strength, like it wants to go, and then it just doesn't go because the rest of the market just starts crumbling down. So that is pretty much what I got. Again, JPM needs to break out to the essentially that 116 mark, 117 mark. If we break that, could start getting some upside. But again, I think core CPI is really going to matter. Again, non-farms kind of got it shooting off Friday, got rejected. It could potentially open up above that 117 and just start ripping. I think at the beginning of the week, you're going to see potentially some strength. You're going to see some pre-earnings run. And then I think, again, Wednesday, if something bad happens, all those gains I think are going to be flushed fairly quickly if there is. So big week on deck. Be very mindful of that, to be very careful on what's going on. But aside from that, just manage risk and slowly accumulate in this market. I think it's a very pivotal. If, again, we can't, of course, CPI continues to push. We're going to be in trouble. The bleeding will not stop yet, but I think it's around the corner. I think we could get another. I think once we get this quarter under our belt, Q3 under our belt, I think Q4 is going to be a big one, a big strong back into this year. So really just kind of waiting to see what happens here in Q3 and Q3. So you're going to see kind of the beginnings of that. In this earnings, but we should start to see a big reversal going around towards the back half of Q3 into Q4. So that's kind of what I'm looking at. But if you made this far, I appreciate you. Go ahead and drop a like button. Until next time, I'll see you guys later.